Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me, Aston and Hechter, both from Anchor Capital. And today we're talking financial services company Transaction Capital. Best known as the minibus taxi finance provider, the company is outperforming the local economy as we saw in their most recent results. Gentlemen, thank you so much for joining us. It seems as though this might be a particular stock you like, despite the interesting environment and mix that they have here. Sean?
Sure. I think the key attraction of this business really, Gugu, is the fact that you're buying very much a niche operator in their chosen markets where they've got dominant market shares in the case of the taxi business. So they can earn very high returns in that business, and at the same time it's valued as if the current profit base that they're achieving is as high as it gets, and that's certainly not the case in the sense that there's a lot of capital that is yet to be deployed. So we think it offers good value.
Maybe if you can walk us through some of those themes, Liam, because they did get out of the unsecured lending space just last year when they sold off Bayport and Payport, I think, those two companies there, but also looking at the risk environment and providing some kind of support to municipalities.
Sure. I think specifically if you're talking about the municipalities, that would form under the risk services division, and that is the company MBD, and they piloted a project last year, well in the first 6 months of this current year, where they had quite a satisfactory outcome. So they basically did a hybrid deal where they helped the municipality to collect on their outstanding municipal debtors, and they sort of generated great profits out of it. Whether we factored in more of those types of deals in future, I think it's quite fickle to be doing business with municipalities. So we're not really placing a very high multiple on those earnings, but we think that it offers blue sky potential to the business going forward.
It's a very diversified strategy that they have that could work to their advantage or not, but which particular areas of the business do you like as a sweet spot? Sure.
So when it IPO'd, I think in 2012, it was a very different business to the one that we have today. So it had a big unsecured lender, Bayport, inside it, and then it also had Paycorp, which is basically a mobile ATM operator, which is also actually a very good business. And I think when the sentiment turned on unsecured lending, they decided, the risk profile is bringing down our business's sort of rating in the market, and they decided to offload that. At the same time, they got offered a very high price for Paycorp, and they are corporate financiers, so they said, the price was satisfactory to us, so they offloaded both those businesses. They issued a special dividend of about R1 a share, I think, or it was about R1 billion special divvy, and then they kept the other R1 billion that they got from the sale of those two to redeploy into growing the business. So today you're sitting with SA Taxi, which is one of the divisions, and then Risk Services, which is made up of three businesses, being MBD, which is sort of a financier in the SME space, Rand Trust, which is a debtors factoring business, and then Principal, which is also in that credit sort of modeling industry. So we like the themes. In terms of SA Taxi, I mean, that's the crown jewel for us in the group.
If we look at the results theme overall, Sean, it does seem as though they are consistent at putting out a headline earnings per share above 20%. Sustainable growth in earnings, it does seem.
And they've more or less guided to that being sustained. And I think what you're going to see in the business going forward from an SA Taxi point of view, it's quite interesting in the sense that business is still sustaining mid-teen advances book growth. And that's a combination of the fact that they historically invested quite heavily in Chinese vehicles in the local market, which come with them, it's poor collateral in the sense that when you refurbish those particular vehicles, you don't get the kind of residual values that you'll get on Toyotas. Parts are hard to come by. It's a much more complex business. They break down. So they actually had quite a poor experience with the Chinese vehicles, and they've been running that part of their fleet down quite significantly. So what you're going to see now, as they replace the vehicles with Toyotas, your average price point is much higher. So part of their 15% odd advances growth that we foresee in the taxi side of the business is an element of much higher price points for the new vehicles they're bringing on. But at the same time, the credit loss ratio is going to decline significantly. So it currently sits from memory at about 5% or so, thereabouts. Yep. And I think that could well come down into the fours, quite deeply into the fours, as you see this roll-off of the debtors relating to the Chinese vehicles. So we think the business is an improving one, and the prospects for organic growth in that space are quite strong. What they've also done, because I think ultimately the demand for taxis is greater than the supply. So, and you must remember they're 40% of the finance book of taxis in South Africa, and there's demand for that transport. I think outside of that, they're busy piloting new projects in the sense that they're looking at writing loans on bakkies. Now, that's a potentially huge market in the sense that there's 1,000 taxis, principally Toyota Quantums, if you want to look at the core product, that are produced in this market. And there's about 4,000 bakkies that are produced.
Sure.
Now, there's an element of customer base who might be turned away from a Westbank, as an example, where it's a slightly lower credit risk or poorer credit risk that Westbank might not be prepared to take on. But in the case of Transaction Capital, they've got very good experience with repossessions of vehicles that do go into default, with their ability to actually recover the collateral through the refurbishment programs that they have, and that they've proven so strongly in the taxi space. So the potential for them to grow their book into that space is very, very strong.
So you like the asset-backed financing idea, and that almost seems to be a common theme, especially after the most recent results that the chief executive announced there, that they might look into your sedan taxis or Uber, as we've come to know. Liam, maybe this is another area that you might like.
Sure. I think it just adds to the optionality within the business. So it's not something that we at the moment, it's difficult for us to quantify what kind of effect that would have on transaction capital. I think it is. I think it's in their sweet spot. They've got the technology. I mean, so what they do in the taxis is they basically install kind of like a telematics device. So they have a lot of information on taxi routes, which helps them to credit model or risk model these sort of the riskiness of the loans they make. So if they've got that same information on Uber routes, they'll also probably find an optimal outcome. Whether or not the market for Uber taxis, I think they might be a little bit late, because I think already that market is starting to get a bit saturated, but maybe there's a lot of potential in areas where it isn't. So maybe cities like Port Elizabeth or George, for instance, where there's still a bit of sort of space to grow the Uber market.
Let's touch on the other area that you highlighted in the beginning of the show, the risk services, which also seems to be a potential area which is growing, which I'm fairly nervous about, because municipalities, we read the headlines, it's not as though they're coping very well with their finances. Sean? But
that's exactly where these guys come into it. Yeah. So the fact that the municipalities are in the trouble that they are is a massive opportunity for an operator like Transaction Capital, where they've got skills in collecting on debtors, they've got databases that they can utilize to help in that regard. So I think that this business is very well placed to actually assist the municipalities in recovery of debts. So we see that as a positive, not a negative, the fact that the municipalities are under such pressure.
I think a good point to make on that is that a company like MBD actually thrives in a distressed consumer environment. So it's a very defensive business, because ultimately in times when the consumer's distressed, while that cycle's troughing, they can pick up books at reasonable prices, and as soon as that cycle turns, their profits that they generate on those books are very high. So that's a theme that instead of seeing that as a negative, we view that as a positive.
Looking at the share price, though, year to date, it's gone up just over 60%, currently trading at around 9 Rand odd. Is it one that you like at the current valuations?
It still offers good value. I think the way to look at this business right now is they're generating at about a 12% return on equity, which sounds quite low. But you must remember that, and that translates into about 1.5 times price to book if you were to view it like a bank, a financing operation. Now, we think the sustainable return on equity is much higher. It's probably closer to 20 to 25%. And part of that equation is the fact that they've got about 800 million rands worth of undeployed capital across the group. So it sits in part of sits in the subsidiaries, but it's not necessarily deployed. When you look at the balance sheet, you've only got 3 times gearing, assets versus equity, which is very low. So we think the opportunity for them to gear their balance sheet more to utilize that capital will drive returns up. And ultimately, if you've got a business making a 20 to 25% ROE as a financier or as a banking operation, we think that should sustain at least 1.8 to 2 times book multiple, and it's sitting at about 1.5 times. And I think just coming back to the fundamentals of the business, is very important to understand the type of lending they do. The real nuance between something like Transaction Capital and a typical bank out there lending to a consumer is these guys are lending against an income stream. They're not lending against consumption, where you see a lot of bad debts, and that's where the real problems sit. But when they make a taxi loan, they're effectively lending against a cash flow stream that they can model and track very carefully. So they know exactly when their taxi operators are getting into trouble and that there's a problem emerging.
So it's in a unique positioning, as you mentioned it, with the asset-backed initiatives there. Looking at the future prospects of the company, we mentioned the asset financing. These companies or cars that they actually finance might also need insurance, which could be another avenue for them to look at. That 800 million rand might come in handy there. Liam, I don't know, your thoughts on potential future expansion?
Yeah, so I think what's going to happen. So about a year ago, we thought, they got this R1 billion to spend. They might add a third pillar to the business, do quite a big acquisition. But I think that that's a very smart management team, and they've been very conservative with their cash. So they've kept that money, and I think they're going to adopt a strategy of more vertical integration within their existing businesses. So SA Taxi, for example, they will probably add more offerings inside SA Taxi instead of going out and buying a big business that they might have to end up paying a very high multiple for, because markets valuations are generally quite high at the moment. So maybe they'll just deploy some more capital into growing existing businesses, and then wait, and if there's possibly a big change in where the valuations are in the market, they can pick some assets up at some good prices. But we back this management team to make the right decision with capital, and I guess that's a large part of investing in any business. You got to back the management team, and you got to trust that they're going to spend your money wisely.
We'll get into that in a moment or two, but time now to get that important question answered today. Buy, hold, sell, Transaction Capital. Liam, let's start with you. Transaction Capital, buy, hold or sell?
It's a tricky one because we like it a lot, and we do think it's a buy. The liquidity is a bit of an issue for us, so for any big asset manager, and I'm not saying we're big, we're still relatively small, but it's still, the liquidity is something we take into consideration. But I definitely think that it's a business that's offering good value, and I would want to buy it, yes.
Sean?
Yeah, I would agree with that. It's certainly a buy in my books. And I think the same point to be made. Liquidity is tight, so it's not one that you must necessarily say it's going to be 8 or 10% of my portfolio, because even picking up stock might be tricky if you're managing large sums of money. It's obviously less relevant for private clients, but certainly it's one which I think can deliver 20 to 25% earnings growth at the type of rating that they're trading at now. There's little reason to believe that you should have a D rating. So I think this is a share that can deliver 20 to 25% type total returns for the next few years.
So stick with it for the long term.
Yeah.
Liam had mentioned just a moment ago about backing management, and before we had Mark Lamberti, and everybody knows about the success story that he made out of Massmart. He's now left Transaction Capital, but David Hurwitz and the team that he's got in place, you're fairly confident in them?
Yeah, I think it's often a subjective assessment of management. So it's about eyeballing the guys, talking to them, understanding their strategy, and also track record and decisions that they've made or decisions that they haven't made. And I think the fact that they've looked at a number of transactions and probably turned many of them down, I think is a good thing. Yeah. So I think it's a disciplined management team that knows how to allocate capital correctly. And that's a lot of what we take into account when subjectively assessing what we think of management.
Well, that's where we'll leave it for this week's edition of Talking Stocks. Clear consensus coming through from our experts by Transaction Capital. That's where we leave it. Do join us again next time.